$380 billion. That's what big tech just committed to spend on AI this quarter alone. But here's the twist. Wall Street is not happy with everything. Some stocks soared. Others crashed 11% in a single day. Google, Meta, Microsoft, and Amazon just revealed their AI spending plans, and investors had very different reactions. By the end of this video, you'll understand who's winning, who's losing, and why some of these bets could be the biggest mistakes in tech history. Let's get into it. First, let's talk about the elephant in the room, the sheer scale of this spending. Amazon, Microsoft, Google, and Meta are now projecting a combined capital expenditure of over $380 billion for this year. That's billion with a B. To put that in perspective, that's more than the GDP of entire countries. And they're all saying the same thing. AI demand is virtually limitless, and we need to build now. But here's where it gets interesting. OpenAI just announced deals worth around $1 trillion with partners like Nvidia, Oracle, and Broadcom. This makes the big tech spending look almost pedestrian by comparison. So clearly, everyone's going all in, but the market isn't rewarding everyone equally. Let's talk about the winners first. Amazon, the clear winner. Starting with Amazon, their stock absolutely soared after earnings. Why? They beat on both earnings and revenue. Plus, they bumped their spending forecast to $125 billion, up from $118 billion. Their CFO basically said, "We're going to keep throwing money at AI because we see massive returns coming." And investors loved it. The key here? Amazon Web Services, NFX, their cloud division, pulled in $33 billion in revenue this quarter with 20% growth. They're the biggest player in cloud computing, and AI infrastructure is built on the cloud. Google, the overachiever. Next up, Google. Their stock jumped 2.5% after they crushed earnings and massively increased their spending forecast. Get this, they went from projecting $75 to $85 billion to now saying $91 to $93 billion. That's a huge jump, and Wall Street actually cheered. Why? Because Google has what analysts call predictable earnings. Their cloud business grew 34% to over $15 billion, and their core search and ads business keeps printing money. They have a clear story of how AI spending turns into revenue. Microsoft, the slight stumble. Now let's talk about Microsoft. They actually beat earnings estimates, but their stock still fell 3%. What happened? Their CFO dropped a bombshell. Capital expenditure growth is going to accelerate in fiscal 2026 after they previously said it would slow down. We're talking about at least $94 billion and potentially $140 billion when you include leases. That's triple what they spent in fiscal 2024. Analysts are saying, yes, this shows strong demand, but there appears to be no end in sight for this spending. Azure, their cloud service, is growing at 40% though, faster than Amazon. So there is a revenue story here. But investors are nervous about the scale. Meta, the bloodbath. And then there's Meta. Oh boy. Their stock plummeted 11%, the steepest drop in 3 years, despite beating on every metric. They're spending $70 to $72 billion on AI. But here's the problem. Unlike Amazon, Microsoft, and Google, Meta doesn't have a cloud business. They can't point to a clear line from "we spend X on AI" to "we make Y in revenue." Instead, they're saying AI helps their ad targeting get better. That's vague. And investors hate vague. Plus, the Reality Labs division, that's the metaverse and AR stuff, just lost $4.4 billion in one quarter on only $470 million in revenue. Analysts at Oppenheimer actually downgraded the stock, saying this whole superintelligence labs thing. Mark Zuckerberg announced mirrors the metaverse spending spree from 2021 and 2022 that went nowhere. So here's where we need to talk about the elephant in the room. Is this an AI bubble? More and more skeptics are coming out saying these spending levels are unsustainable. They're asking tough questions like, do we have enough energy to power all this AI infrastructure? Are the returns actually going to materialize? Or are we watching another dot-com bubble inflate in real time? The bulls say AI is transformative and demand is limitless. The bears say, show me the revenue. And right now, the market is rewarding companies that can clearly connect the dots between spending and revenue and punishing those who can't. So what does all this mean for you and me? First, the AI arms race is very real. These companies aren't just talking about AI, they're betting their futures on it with massive infrastructure investments. Second, cloud providers have the clearest path to monetization. If you're building AI stuff, you're probably using AWS, Azure, or Google Cloud and paying handsomely for it. Third, the market is getting more sophisticated. Just spending on AI isn't enough anymore. You need to show how that spending turns into profit. And fourth, we're entering a phase where there are going to be clear winners and losers. Not everyone making these massive bets is going to come out ahead. For Meta in particular, they need to figure out their revenue story fast, or this $70+ billion bet could turn into their second metaverse-sized mistake. $380 billion from 4 companies, $1 trillion from OpenAI. This is the biggest infrastructure build-out in tech history. Whether it's a bubble or the beginning of a new era, we're living through it right now. What do you think? Are these companies visionaries, or are they throwing money into a black hole? Drop your thoughts in the comments below. If you found this breakdown valuable, hit that subscribe button. We're covering all the biggest moves in tech and AI. Thanks for watching, and I'll see you in the next one.